earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money. Only here on the School of Cash Flow.
Good afternoon and welcome to the School of Cash Flows. I'm the podcast host, Dale Corpus, and I have another great guest for you today. His name is Arjun Dhingra. He is a certified mortgage advisor and has been in the industry for 21 years. He creates content around financial literacy and real estate related topics to empower people to make smarter decisions around mortgage debt and portfolio growth as it relates to real estate. With the ability to serve 31 different states, he can offer a creative and holistic approach to mortgage clients while collaborating with real estate professionals via social media in these respective markets. He's also featured in as a San Francisco host for the Emmy-nominated television show, The American Dream. Side note, Arjun is also has a martial arts background of 35 years in Taekwondo and is the current co-head coach of Team USA. His passion is helping people level up and win, whether that's from renter to owner, saver to investor to athlete and world champion. He's committed to making his clients' dreams come true. Awesome bio. I'm actually very excited to have you on the show today, Arjun. How are you?
Thanks, Dale. Thanks for having me on, brother. And I appreciate all that you do for the real estate community and space, man, with this podcast and everything else. And it's nice that we're in each other's backyard too, right?
Yeah.
We're kind of close to each other, but I'm doing good, man. And again, thank you for having me on.
Yeah, San Francisco Bay Area. Here we go. It's like, have you always been living in the San Francisco Bay Area?
No, so I grew up in Nevada originally, which is where I got in the business. But I moved out here shortly after getting in the business to open an office for us. And then I would travel back and forth between both markets. And then around the time of the market crash, 2010, I started making San Francisco a little bit more of home base. So I was there. And then now with my family, we live in Marin. But yeah, I've been in the Bay Area on and off for about 18 years.
Okay, got it. Let's start chatting about your your mortgage business then. So it's like your office, I know it's based in San Francisco near Jackson Square. Tell me more about what kinds of, mortgage types of clients that you work with. Is it, primary residence owners, investors, everybody, all the above?
Yeah, it is everyone. I mean, my main niche and who I enjoy working with the most specifically are first-time buyers, whether that's individuals looking to make their first purchase to live in or to start acquiring and building a real estate portfolio, but just a first-time buyer in general, a newly formed couple or household that's looking to, join forces and buy something to kind of start their lives together. We deal with a lot of investors as well because we have very good and flexible investor product, which is helping create a lot more inroads and making things possible for people that want to acquire real estate. And those are primarily it. A lot of it as well is past clients and during certain times of the year, certain types of the market cycle, like refinance activity, of course, and debt strategies and consolidation and pulling out money. But primarily, those are the types of personas that we've worked with and who we enjoy working with. Okay,
I got you. And with the with the rising interest rates, obviously a lot of they doubled last year and whatnot. We're not seeing too many refinance opportunities. So it's I take it a lot of the stuff that you're focusing on is just a purchase business, I'm guessing.
It is, yeah. There's a lot of purchase. There's some strategic refinance business that's out there where people will look to just tap the equity because they want to have money ready to deploy for other investments, right? Or they want to see that if there's a correction in a market, they want to have money ready to go. So they may or may not pull money out and restructure their existing mortgage. They might want a line of credit, which I think is always a good thing to do, is to get these things in order so that you've got some weapons ready to go when the opportunities come in the market. Because as you know, as somebody who is an investor yourself, there's opportunities that are going to be around the corner here in 2023, like major opportunities. So people just want to be ready.
Yeah, I mean, a lot of times like this, people just want to have access to cash because in just like this, we're approaching another downturn. It's like there's still yet to be a lot of good investment opportunities to be had, and so you got to be able to pull the trigger and have access to that type of capital, right? I take it you help people get standalone equity lines of credit or
yes.
Yeah,
We do.
okay, it's awesome.
Yeah, we have access to that. Yep.
Both on like their primary residence, even on and rental properties too.
As well, yeah, it's more difficult to get them on investment properties in general, given the current climate. But yes, we
Yeah.
do have access to them and do them. Yep.
Since a lot of folks here, like, and you're the first, mortgage originator that I brought on. A lot of folks here are investors. I mean, let's talk about, like, might as well just talk about this since you're here. Let's talk about, investing, the mortgage programs for investors. What are some of the popular mortgage programs for investors nowadays?
Well, I think, if you're looking to put money into real estate as an investor, on the mortgage side, there's product out there if you're looking to acquire residential property, or meaning 4 units or less. So maybe you want to acquire a fourplex, that you have rented out. That's fine. And though there's amazing product out there in the way of one particular loan, which is called a DSCR loan. That's a debt service coverage ratio loan. And a lot of your investors or people that listen to this podcast are probably familiar with it. But it basically, in a nutshell, uses the rents of the property, the fair market rents, to qualify you for the mortgage instead of your income. Because a lot of us, especially those that are investors or entrepreneurs or business owners, we don't show a lot of income on paper. And so this is where a lot of investors feel they get stuck and they're like, I can only go the private route. No, there's a great space or niche, which is in between private and traditional, which is called non-QM. And this type of loan that I just described to you falls within that space. So this has been a great access point for a lot of investors to be able to acquire 4 units or less purely for investment purpose only. It's not meant to be a loan that you acquire and then you live in the home or it's a second home. This is meant to be an investment because it's only qualified based on the fair market rent. So you just have to put down the appropriate down payment to make the numbers pencil out, and you've got a deal there. There's other ways in which investors can get into real estate, right? Whether it's buying into REITs or C-REITs, which are, like more incubator styles. There's also, ways of doing syndications. There's a lot of people out there that are very successful, particularly here in the Bay Area. There's great resources that people can connect with of people that source deals. They know how to structure deals, and they're just looking for either debt or equity partners. And so a lot of investors are out there. They've got capital to deploy, but they don't have the time to deal with the maintenance of a property or the ongoing month-to-month upkeep of it or the servicing of that property, collecting rents, cashing checks, doing it. But they would be happy to get a fixed rate of return by investing in with a group that is going to do this for them and does the heavy lifting. So this is a popular way as well. So there's always many ways to get into real estate. You can partner with people. You can go the private route. You can do products that are creative like this DSCR loan. You can invest into REITs. You can also do, crowdfunding within REITs, which are C-REITs. And then, there's syndication. So there's many, many ways in which investors can get into real estate. It's not just a linear process.
Yep. And it's like with real estate investing, to your point, it's like you could be as active as you want in real estate investing by doing everything yourself, managing, or is like, to your point, you were talking about syndications, to be as passive as you want. You just you invest with partners and let the partners do more of the heavy lifting, where you invest your 50K or whatever it is into the syndication for a certain amount of return.
Yeah.
Side note, it's like, the DSCR product is a really nice product in the sense that it doesn't even require you to have a job, because the property, it's based on the subject property that you're buying, provided that it cash flows and it's greater than the mortgage payments and tax insurance, then you're good to go for the most part. So, which is an amazing thing.
Definitely.
Yeah, no, definitely. Tell me, actually, when going back, it's like, how did you land in the mortgage industry, out of curiosity? Because it sounds like, we both, so my audience knows I also got in mortgage industry too in the early 2000s. Like, how did you land upon it? It's just like, did you know always you wanted to?
No, I mean, same. So funny you asked that, right? It's the same as everyone, right? Nobody sets out and looks for this industry. This industry just kind of finds you, or you fall into it by accident. And that was definitely the case for me. I was living in Reno, still in college, my senior year. And I was living in a fraternity house, and I had some friends that had dropped out of school living in Vegas at the time. So I lived in Reno and they were in Vegas, and they got into the mortgage industry as brokers, and they were doing really well, like driving really nice cars and living a high life, which for college students is like, wait a minute, what are you doing? So I just suspected they were dealing drugs, or they were just really good gamblers and making a lot of money. But they said, no, we're doing mortgages and we need help up in Reno. So I started driving around to people's houses on their behalf, because this is at a time, 2001, when everything was on paper. There was nothing digitized about the industry at all or automated. So you had to go to people's homes and have them hand fill out applications and process and submit them that way. So we did that, and I was making money that way. And then look, I said, look, I want to get on the other side of this because there's clearly something that can be scaled here. So my brother and I teamed up, as well as with another partner that we had. Three of us basically just signed a lease on an office space and hired a bunch of college students to be telemarketers for us. And we ran a call center doing refinances all over the country. And that's how we got started. And then it grew from there. And, 22 years later, even through the market corrections and cycles and the financial collapse of 08, we're still here doing it. But yeah, it's been a wild ride.
Yeah, no, it has been. I mean, it's like you've been in it long enough, obviously, where you saw the mortgage credit crash around 2008. And so now here we are again, with just another slowdown in the real estate market and whatnot. Like, what are your thoughts on just, as it relates to just the current economy? What's your take on the housing market and the mortgage rate situation? Rates have doubled, last year. I mean, are we in a recession, or what do you feel?
Yeah, I feel, look, there's a lot of information out there and a lot of negativity that's being peddled. And we have to remember where that's coming from and who benefits from that, right? So the media portrays things very negatively and very doom and gloom. And that's their business because they're in the click business. Yeah. They're in the subscription business. They're in the hooking you business, right? The longer you're drawn into a negative story, the more profitable they are because you're being exposed to ads and you're tuning in. It boosts their ratings and viewership, like, etc. There's a whole cycle behind it. So you have to understand a lot of it's by design. And if you don't believe me, you have to just think back to COVID, right? It was a terrible situation, but certain networks were actually airing a death tracker. Like, how morbid is that? They were tracking the amount of deaths and showing it like a ticker, like as if it was a stock index. And people were drawn into this and it was consuming them. So if you don't believe in fear peddling or, kind of raising hysteria by way of negative reporting, you just have to think back to that. That's the frame of reference. So we have a lot of that, but how do we combat that? We have to also recognize and acknowledge that some of the greatest wealth and greatest stories in terms of prosperity are created during down markets. Absolutely. Right. You just like the biggest names and tycoons in U.S. economic history, like the Rockefellers. These were built during the Great Depression. So clearly, a lot of companies and a lot of wealth and a lot of visionaries see opportunity during downtimes. And there's absolutely one now. I can point to something a lot more realistic and more relatable, and that is you've got big funds or institutional investors like JP Morgan or Blackstone that have acknowledged and said they're sitting on the sidelines. And I know you know this too. They're sitting with $1 billion or several $1 billion lined up, waiting for just a little bit of a pullback in the market. And then they're going to get in there and acquire and absorb a lot of single family and multifamily inventory. So that means the real estate market has got some very good prospects because of billionaires and funds are very anxious to buy. Then that tells me the asset class clearly has some legs underneath it, and it's not going to collapse. And this is nothing comparable to 2008. We had a slowdown in housing that eventually was exacerbated by a financial collapse that led to a recession. It wasn't the other way around. A lot of people think a recession caused the housing market to collapse. It was the other way around. Whereas now recessions happen irrespective of what's going on in housing. And then housing sometimes ends up being a bright spot in that recession, or it ends up actually taking off and doing well during recessionary periods because mortgage rates tend to get better. So the point I'm making in all this and what it means for an investor or consumer when thinking about all these things going on and all the negativity that's out there is huge opportunity. Because what have these higher rates? Like, let's look at all the negative things. We've got a market that doesn't have a lot of confidence, a lot of people sitting on the sidelines. We've got interest rates that have doubled, and we have really tight inventory. Mm-hmm. So that all sounds pretty negative, right? And you're like, well, who would want to buy during this? Well, a lot of people associate and equate a good market to where interest rates are at. So when rates are lower, they think that's a good market and a good time to get in. When in actuality, it's actually the opposite. We just have herd mentality. Whereas everyone starts to get in and then everyone feels, I've got to get in this market too. I need to find a place. Everyone's buying, everyone's moving, and it creates a little bit of a frenzy. But it's because of those negative things, quote unquote negative things that I just pointed out, that we have all the opportunity we have, because we have less buyers, we have less bidding wars, we have less crowded homes during open houses. And if homes are priced appropriately with maybe the right incentives or the right pricing strategy or the right type of a deal and the right negotiation can take place, there are amazing deals that you would have never been able to find years ago or even a year ago that you can get now. So for buyers, it's actually an amazing opportunity if you choose to see it that way. But if you choose to read into all the fear mongering and all the negativity, you could get swept up and say, well, I'm going to just sit this out because everybody's saying and the media says this is a terrible time to buy. It's not that they're saying that. They're just putting out a lot of negative things and you are associating that as a bad time to buy. But in reality, there's actually amazing and tremendous opportunity. It may not be for everyone, but for those people that are really locked in and looking, there's huge opportunity. And I see that continuing this year because rates are just temporary moments. We have to remember that nobody ever keeps an interest rate long enough to realize whether it was a good rate or a bad rate, because the average person refinances every 3 to 5 years so quickly that, again, you don't realize whether that was a good rate. The rate is just merely an access point. So if you focus more on the right deal, the right incentives, the right price, the affordability, the rate doesn't really matter because you're going to have a chance to restructure that debt in this current cycle. Probably in this calendar year of 2023, we're going to have lower rates as inflation cools off. And when we have lower rates, you'll be able to restructure, but at least you'll be on the ownership side, whether it's as an investor or a home dweller, as opposed to then trying to get back into the market.
Yeah, it's like the thing. I mean, you bring up really, really good points out of there. It's just like in terms of, the mortgages are never permanent. The house is. It's like,
yes,
I see people on social media like the hashtag, what is it? Date the rate, marry the house. I mean,
yeah,
it's kind of funny, but it's kind of it's one of those things. It's like lock in that low price because that price is going to be, the prices now are obviously a lot better than what we've been seeing from last year. Yes, rates are higher. Maybe you're paying your monthly output for the PITI for the house is more than we're paying for last year or whatnot. But the thing is, your price is a lot lower. Your tax base is lower, and here in California, that sets the price. The price, the basis by which your property taxes go up, and they're capped every year because of Prop 13. But regardless, it's like people just need to know that could be restructured exactly what you're saying, and those payments will just be able to go down and whatnot, and then you'll be even more happy that you bought in a time like right now because you locked in that lower price point and you're paying a lot lower property tax than somebody that bought in a prior year.
Yeah, it's a huge advantage. And what happens when rates go down? You have to remember, like if you get in now with a higher rate environment and rates go down, what happens? More people enter the market, they get approved, they start shopping, bidding war start, and the value runs up. But if you're already on the other side of the fence where you own, you're going to benefit from that run up in the value uptick as opposed to trying to get back in and now getting into the race all over again like it was a year ago.
Yep, absolutely. One of the things I wanted to touch upon, which is in your background, is the fact that you've been in martial arts. I mean, like since you were a kid, it sounds like.
Yeah.
Was it your parents? Was it you and your family? Like, did you and your siblings do it together? Or is like
we did? Yeah, my brother and sister, who we all work together, and everyone, a lot of people that follow this podcast and people in the real estate space know who they are. My brother's Neil Dhingra and my sister Shivani Peterson. They're both very active on social media as investors and educators and thought leaders in the space. But no, we all did it together, but it's not that we were forced into it. I got into it at the age of 8 because I was being bullied in school and I wanted to get into some kind of martial arts class so I knew how to defend myself. So my mom just took me to one, and it happened to be a Taekwondo class. My brother joined me and started like maybe a year later. And then we did it together for a number of years. And then my sister got into it too. And then I ended up being the only one that kind of stuck with it. But it was a very big piece of my life that was, during formative years and even post-formative years, but it gave me an amazing network of people. It was good for my wellness, of course. And then it provided me with the opportunity to be able to compete and represent my country in international sport. So I started competing internationally in 2007 for Team USA. I did so for 7 years and then retired. And then I had the privilege of becoming the co-head coach for Team USA's Taekwondo team right after that, which is what I've done now. And it's been about 10 years that I've been the co-head coach. But I started a little bit before I retired as an athlete as well. I was doing both roles. But it's been extremely rewarding. And it really kind of ties into my mortgage brand as well, because being a mortgage advisor and being a Taekwondo coach are two very similar hats, because you're taking somebody from point A to point B, from athlete to champion, or from, kid who was being bullied to someone who can now stand for themselves and defend themselves, from, saver to investor, from renter to owner. So it's all about a journey. And the coaching hat and the advisor hat are very much the same. And that's why I kind of interweave the two very much into my social and online presence, because I just feel like they're one and the same.
Got it. Let's see, lessons learned. I mean, any lessons learned or just things that the skills you picked up in the martial arts world that have translated that you use a lot in your personal and professional life?
I think you can always learn from people that have done it before you, right? And I think that's definitely applies in real estate.
Mm-hmm.
If you want to figure out ways to get into real estate, invest, create portfolios, talk to people that have done it, be around people, learn from people, subscribe to podcasts where the guy running the podcast, like this great one, has done it and he walks the walk. Learn from those people. Taekwondo and my martial arts upbringing was very much the same. If I wanted to be successful, I wanted to hang around and learn from people that have done it, that have achieved certain ranks and won certain titles and competed at certain levels, because that eventually rubs off. So that's definitely been one. And the other one where martial arts gives you a lot of humility, and this helps me out as a professional and someone who provides a service and an experience, is that you're never done with your work. You have to constantly get better. You got to improve. We can all improve, but Taekwondo, the work is never done, because they have this saying that a student is always a student, right? You never stop learning, and you don't quite ever master anything, no matter how. I've been doing it for 35 years I've been in Taekwondo, and I still feel like I'm a student, right?
And you're still doing it now. Yeah.
Yeah, I'm still doing it,
a
right?
student. Yeah, it's amazing.
I'm still a student. You're always a student. A good student can learn anytime, anywhere, they say that. And I think we need to also take that on as professional service providers as well, like people in my industry. Like, my work's never done. So I'm constantly trying to get better and learn better ways to advise and more creative ways to market and more creative ways to offer solutions to clients. And that type of humility and that type of eagerness to get better and advance and evolve has probably been something that's kept me in business this long. And it's definitely keeping me inspired in the martial arts space as well, and helping other people do it.
Yeah. How often do you train in Taekwondo nowadays?
Taekwondo, I train 2 days a week on my own because we're in a down cycle. We just had our world championships in Amsterdam this last July. So Team USA was there and participated with about 40 something other countries. It was a great world championships. They had been delayed because of the pandemic. They were supposed to have happened a year sooner, but they got pushed off. And it was a great experience. Our country and team did very, very well. Team USA did really well, had one of its best overall outputs that it's ever had. So I'm really proud of that and the work we did. And we had some amazing stories from some of our athletes. But now we're in a little bit of a down cycle. So we're not coaching and training as much, but everyone kind of keeps up on their own. I don't get out to the East Bay as often to train as I'd like to, maybe once or twice a quarter, but a lot of the training is on my own right now.
Okay. I'm actually, one of the questions I want to switch back and go back to the mortgage industry. I forgot to ask about this one. What are some of the challenges right now that you're facing in the mortgage industry and from your business?
Yeah, I think you've got, again, this ties back to the media. You've got the media that's painting a certain narrative. So you have to combat people's anxieties and fears and confusion around what's going on. And then you're battling also the fact that rates have doubled. So, having to explain and really clarify and add context around that, instead of just saying, look, I'm sorry for the rates or whatever, like not apologizing for them, but rather accepting that the market is what the market is. The market's where it's at, and that's the market. So you have to make something out of this current market. And in doing so, you need to just be really solution oriented. But that's been definitely a challenge that's hit the industry for over a year, but I've embraced it, because this is where, kind of the good gets separated from the weak ones in our industry, both in real estate and in lending. I mean, some 600,000 lenders and realtors will exit the industry nationally over the next 2 quarters, Q1 and Q2 of this year. That's a lot of people. That's a reduced amount of competition, which means the market share is relative. Even though the pie might be shrinking of available market because there's not as many buyers or there's no homes to refinance, things like that, the amount of competition's gone down. So if you choose to see it as an opportunity, you can go after it. That's definitely what we've done in spite of the challenges, because your question was, what challenges have we seen on the mortgage side? So yeah, higher rates, dealing with consumer mindsets and paradigms that are set and trying to break down some of those patterns or deconstruct them, and getting people to see things a little bit of a different way by offering a different light and a different set of information. That's been a challenge, but it's one that we've kind of accepted and taken on. And I enjoy doing that by way of content creation, by way of sharing on podcasts and having conversations with folks.
Yep. Awesome. Yeah. It's like the more people, like those veteran, practitioners in real estate and mortgage, like the ones that are really here to stay, like we thrive in these types of markets, because like as the competition just dwindles and people are, leaving the industry, it keeps the business for us. So like,
yes,
good way. It's just like, it's like you still got to work hard. It's like nothing's still going to come easy, but it's just like there's still like what I'm hearing is there's still a ton of opportunity.
Yeah, there is
Absolutely.
massive
And
opportunity.
I feel like there's just a lot of, a lot of the stuff is just regarding education with the consumers, just making sure that you're breaking down all that hysteria, all of this stuff that's being pushed on the media and whatnot, and just making sure that it's being told the right way. Because
Yes,
I don't believe all of the narrative, and just it's not all doom and gloom necessarily. It's just like the narrative needs to be changed.
100%. Couldn't agree with you more.
No, absolutely. So let's switch topics to just investing, especially real estate investing. You've been involved in real estate investing for some time now, I take it. Like, let's talk about even what was your first real estate investment, and what are you doing right now in real estate investing?
So a lot of the initial investing I did was just during the market run up in the early 2000s, 2001, 2002. Bought a house with one of my business partners that we lived in together as roommates. We wanted to co-own it so that we could share in the exposure and benefit from the upside. And then we bought a couple of rentals just because everyone was doing it. And that's just the way you get in. We had some rentals that we didn't hold for too long. In hindsight, I would have held them longer, but that's something you learn along the way. So that's something we did. And I did a few fix and flips. One that I did okay on, and another one that I got burned badly on because the music stopped in 2008.
Yep.
And I ended up I was so upside down on the deal and the delays in construction and everything that we ended up having to do a short sale on it. So it was really painful and a lot of money that went into it. But that was something that was a big, big learning experience. After 2008 and kind of coming back and rebuilding up capital and doing deals again, eventually buying again and re-entering the market for myself, I went back into acquiring not so much investment property, but actually trying to do more syndications because of limited time. And that's where I'm at presently, right? Like, I want to basically go with proven winners. So I work with some development groups and asset management groups that are investing into some alternative real estate classes around the country that are predicated on really good, strong commercial tenants with really, really good rents. And these are great rates of return. We're doing another remodel project with a partner out in Marin County in the San Anselmo area on a home that's going to be flipped that was bought, kind of at a unique time. But I partnered with somebody who's very strong with remodels. I didn't want to do it again because I was not experienced in it. So I think that's a bit of advice for people, is that if you're going to do things in partnership, make sure that one of you or the person that you're partnering with really carries the skill set, if you don't, to achieve the objective in what it is that you're investing. Don't get into flipping with a partner if you've never flipped a house before, or you have no idea of what it is to improve a place, or bring something up to date, because that could become a very expensive and painful learning lesson. But yeah, syndications right now are what we've done. We're also in the process of starting a hard money lending and a private lending fund, me and some partners. So this is going to be critical for serving the investor community, not necessarily investing myself, but serving the investor community, because private money for developers, private money for a lot of rehab specialists or people that are looking to acquire property without wanting to go through normal loan channels is a very, very fluid and active space. So me and some partners pooled together resources and have wanted to get into that. So starting a hard money company, again, lots of syndications, and then just looking for multi-unit in the Midwest. That's what I'm actively looking at now during this economic downtime, because I feel there's going to be great opportunity with certain properties being unloaded.
Got it. Do you have any favorite real estate investing types of strategies?
Definitely on the syndication side. That for me is a personal favorite, because again, I'm trusting people that are very good at what they're doing. I'm coming in at a certain percentage at a fixed rate of return, which I like. And there's a lot more assurances with that, but I don't have to manage, the actual property itself and get into the day-to-day. I trust that. So that for me is a personal favorite, because it's just easier and works better with my life. A lot of others prefer to be kind of more hands-on and actually in the deal.
Yep.
My bandwidth is limited as a family person, and also within my career and the service I'm providing to all my other clients. So that is definitely a favorite of mine.
Okay, that sounds good. I mean, for your syndications, like what kind of asset classes are they mainly in? It sounds like they were commercial, correct?
Commercial, yes.
Yeah, absolutely.
Commercial, yeah. There was a little bit of dabbling in some spec housing developments in Texas, but no, it's predominantly all commercial.
Okay, got you. And in terms of advice, like a lot of folks here are investors, some are experienced investors, new investors. What do you think is good advice just for an investor to know in general? Or what advice would you give to even a newer investor starting off their journey?
I would say get a mentor for sure. There's a lot of resources, but the first thing is to find a mentor of someone that's done it so that you can learn from them, maybe even partner with them, because a lot of investors are always looking for more partners. So it's a great way to gain access, but also mitigate your risk because you're working with people who've done it. And then the other thing, as silly as it may sound, is the free university that people have access to, which is YouTube, right? There's so much you can learn from YouTube from seasoned pros and investors and get a baseline education on a lot of things. I'm not saying that everything on YouTube is valuable, but if you find the right ones, and there's many, many great sources of legitimate, influential people that are successful in the space and they give away a lot of value, there is a tremendous amount that you could learn that like investors from even 15, 20 years ago didn't have access to, right? Like YouTube wasn't around when I got in the business, but it would have been invaluable and helped me avoid a lot of mistakes and probably saved me a lot of money if I had it prior to, the 2008 crash. So use these resources, find mentors, find people that have done it, get around them, and also study up on YouTube.
Mm-hmm. Any like along the way, what kind of mentors and whatnot, even in just even your mortgage business, like have helped you? It's like a lot of mentors come along the way to help you get to where you are. Mm-hmm.
Yes, definitely. Nobody gets to where they're at like on their own, right? Like we have to do the work, but it's not by accident. You have people that were there, you have people that kind of nudged you, people that you looked up to. So at my current company, my CEO is somebody I look up to a great deal, and he's a great resource and mentor, but also just a good supporter. But yeah, in every place, whether it was in martial arts or in the mortgage business, even in investing, I've had mentors and I'm always getting more. Like I just want to be around more of those people because that's what's going to ultimately navigate you through and show you the way, and you can save yourself a lot of time.
It's like it's a fast track to success. A lot of the times they already know the pitfalls, so that they're a good guide to help you avoid stuff that you shouldn't be doing and focus on the real stuff that you should be doing, right? Yeah.
100%.
Hey, some final questions for you.
Yeah.
What are you excited about in your business right now?
The opportunity here in this year, I touched on it earlier. I'm very excited about the opportunities. I'm excited about the exodus of people and the competition shrinking. That excites me. But that also creates me a lot of opportunity for growth and growing our team nationally, growing advisors and helping people use content and video marketing as a platform for driving new business and forging new relationships and creating more opportunity. So I'm excited for that opportunity from an expansion standpoint, from a market share standpoint. Like I said, I think there's tremendous opportunity out there for buyers, and I'm just making it, a continued ongoing mission here this year to educate people and clarify and be the voice of reason and calm and optimism so that more of these clients kind of shake off the negativity and actually proceed forward with making some really good moves.
Okay. And now that we're in 2023 and it's, the new year, are there any new big goals, either personal or business, that you're focusing on working on right now? Mm-hmm.
I think it's more of a growth thing. We are looking to really grow our team. Like there's been a lot of contraction and consolidation within the mortgage industry, a lot of places closing. Wells Fargo announced yesterday they're going to
close down correspondent. Yeah, I saw that.
Yeah, they're closing correspondent. They're going to scale back a lot of their retail ops. And this kind of paves the way for them to do a lot of layoffs because it's just not needed. They don't need it anymore, the capacity. But look, whenever these things happen, which are all cyclical, it's not an indication that a market is crashing or that anything truly negative is going on. It's just smart business that has to be done. And they are doing so, but that creates opportunity for other places because there's a lot of people within the mortgage industry that work at places like that are going to be looking to go somewhere else and maybe take their career to a different level in a totally different arena, because what we offer is very different from the banking world. So yeah, I see that as a big goal of ours, is seeing the opportunity within the labor markets, within the industry for growth and for addition.
Yep, makes sense. So let's talk about the word success. What does success even mean to you?
It means it's a process. It's not something that happens. It's nothing instant. Yeah. Instant and success are two words you can't use in the same sentence. So success is ongoing. Success is evolving. Success is a process. It's a commitment. Mm-hmm. And if you're committed to process, and if you're committed to details, and you remain structured, you will ultimately have success. And there's a lot of victories that kind of happen along the way, which are successful, and that adds to your success. and then you create, a successful life or successful endeavor, a successful career by way of that. It doesn't just happen. It's in more of the trenches and in more of the day-to-day.
Absolutely. Here, and let's see. What would you say is your superpower? What makes you you? What's contributed to your great life so far?
I would say it's empathy. I have a lot of empathy, sometimes way too much, that clients and partners take advantage of, jokingly. But it's a lot of empathy towards people, and a lot of that compassion is maybe around the volunteering I do, or maybe it's because I coach. And I have a lot of empathy in the athletes that I'm around and the people I'm around, but I carry that forth with clients because I've been there, and I think it matters, right? I think you want to work with people who have actually done it. Like, you don't hire a trainer who's not in shape and isn't walking the walk themselves and eating well and in good physical condition. You're not going to take advice from. So why would somebody trust me with the biggest indebtedness they're going to take on if I've never bought a place or flipped a place or made mistakes and learned from them, won and lost in real estate? So I feel that's really, really important. When it comes down to, people choosing people that they want to work with and who they want to associate with, and learning that along the way and learning from those lessons and bringing that forth into my business is something that, I'm constantly doing.
Awesome. Any final words or advice for the audience?
Look, this is an asset class that the media will continue to like to poke at because they feel that they can easily predict this one. The media is generally wrong on almost every asset class there is. And real estate tends to easily sometimes be the donkey they can kick if they can. And a lot of them are trying to liken this with other motivation to 2008. This is not 2008. So my final thought is, look, keep things separate. Do a lot of your own analysis, see through the noise and the clutter and the negativity. And you'll actually see there are real opportunities in this, because 2008, those were real dark days. That was seriously dark for those of us that were around during it. This is nothing like that. There's opportunity here. There's capital. There's liquidity in the system. We didn't have any of that stuff back in 2008, and that made for a really, really tough time, whether you were in the industry or trying to get a home. Really, really tough. But now we've got totally different pastures. So that would be my advice to everyone, is just see through it, seize the opportunity. Don't buy into the hype or the hysterics. Stay calm, keep learning, be a student of the game, and you'll get yours this year.
Yeah, I love it. Yeah, the sky is not falling, guys.
That's right.
A lot of opportunity out there. Arjun, how can somebody get a hold of you?
Just connect with me on Instagram. That's my favorite place to interface with people. I love exchanging ideas. Just find me there at Arjun Mortgage. I'm here local in the Bay Area, and I know a lot of listeners are, but there's also a lot of listeners outside, and we work all over the country, but I love exchanging ideas and connecting with people. So find me there.
All right. Well, that's a wrap then. Arjun, thank you for joining me on this episode.
Thank you, brother. Thanks for having me.
I've enjoyed connecting with you, another Bay Area local, and I picked up a lot of great stuff from you. And I know my audience has too. To my audience, please feel free to reach out to Arjun directly should you have any questions for him. Connect with him. Also, thanks for checking out this episode of the School of Cashflow. And remember to leave a podcast review on iTunes, as it helps me attract even more great guests just like Arjun. So until next time, live life abundantly.
Thanks for listening to another episode of the School of Cashflow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.